Good afternoon. Today is Thursday, April the 27th. The time right now in Kuala Lumpur is 3:31 in the afternoon. Today I'm in Kuala Lumpur, and my apology for the late recording of this particular analysis. And let's recap what happened on Wall Street overnight. We can see the mixed market closing yesterday, largely based on the mixed signal that we saw based on recent data that's been released. The market is still very concerned about the inability of the Biden administration to come to some kind of understanding on how to resolve the debt ceiling. And we don't have a lot of time because we are already moving into the end of April. And by June, maybe as early as May, if this issue of debt ceiling is not resolved, it could cause a lot of volatility in the marketplace. So last night, overnight, we can see that the Nasdaq actually performed a lot better compared to the Dow Jones and the S&P 500. And over here, you can see on a 4 hours time frame, the Dow Jones actually managed to actually test the most nearby support line, which I have been mentioning over the last week or so. This level is 33,275. The market went down to as low as 33,000. Let me see. The low traded last night was at 33,235.8. So we have a marginal bridge, but at the end of the night, before the market closed, it bounced back above this line. So the market is basically very, very near a near-term support. If the low is not already in place, it may actually attempt one more round tonight, and the area of interest for me will be somewhere in the 33,000 levels. Okay, do watch out this bracket of price between 32,967 to 33,085. So this is a bracket of prices. Although there's no obvious support here, but based on a what I call a retracement extension, this could be an area of interest to me. So I would think near term, I think there could be another round of buying interest coming in. Tonight we have the release of the GDP numbers. They do not expect a good number because compared to Q4 of 2022, GDP was at 2.6%. Tonight they expect Q1 2023 to be at 2%. So they do not expect a good number. So if the number comes up better than expected, that could cause a rally in US equities going into tonight. Okay, so this is something that you want to watch. And of course, the other big number that we will also be expecting will be the personal consumption expenditure number. The market do expect a slightly better number for about 4.8%. So we all know that the PCE number is actually what the Federal Reserve do concentrate on as an important inflation gauge. Whereas the market is looking at headline CPI numbers, the Federal Reserve is looking at the PCE numbers. Okay, do watch out for these two numbers to be released at 8:30 this evening. Now, over in the S&P 500, we can see the prices do continue to trace back, and from a high of 4,169.5, and now the market is almost very near the 50% retracement point from the 3,909 to 4,169.5. So this level at the 50% mark, okay, is usually a technical chart point, and this area is 4,039. So we are getting very, very close to this level, and we'll see what happened tonight if the market would actually test this level and rebound from here. Now, the immediate area of barriers, in my opinion, is 4,140 to 4,195. If the market can actually cross beyond 4,195, then we will be in a slightly bullish phase as of now. But like I said, all this week, I think upside potential is not fantastic because we are getting very close to the end of April, and this is what they say, right? Sell in May and go away. So we are very, very close to the May, and this is usually the period in which prices, equity prices, tends to underperforming. Okay, used to be underperformed. So you can see in the Nasdaq earlier on. I did mention overnight Nasdaq outperformed the other two equity index. It has basically been more stable. We can see this week itself, the market actually attempt to take out the month high at 13,205 with a high of 13,196. From there, the market actually failed to take out the high and has been retracing since. And when we look at where the nearby support is, which is the 12,520 in the Nasdaq 100, we have a little bit more room to go before market actually touch this important support line here. So on a relative basis, I will conclude that the Nasdaq 100 is a lot firmer compared to the Dow Jones and the S&P 500. So basically, if the market wants to go up, it will still want to go up. So everything will depend on what the GDP number is tonight, and do watch out. Okay, and over in Asia, we can see that the Nikkei 225, which is the Japanese equity index, having traded to a high of 28,806.7, find no follow through buying has been falling. The low traded yesterday was 28,241.7, and we can see in the second half of this afternoon, we can see the market has a bit of a rebound, but by and large, I think the damage has been done, and I have a very strong feeling the high 28,806.7 is possibly the high for this round. And if I'm right, I think the market is basically very vulnerable to the downside. My target for this one is somewhere between 26,330 to 26,852. So there's going to be about 2,000 points drop potential. So actually, and this is actually from a risk reward perspective, this looks like a fantastic sell setup here. Okay, but of course, this is simply my opinion. Okay, over in the Shanghai Composite, in the Hong Kong Equity Index, you can see that the Hang Seng itself actually found support very near to what I have been telling you guys. The near-term support is at 19,509. Okay, the low traded yesterday was 15,520. So we are basically about 10 points away from the ideal support levels. This morning, we can see that Hong Kong market has basically stabilized. Now, the reason for the most risk for this week's weakness in Hong Kong equities since last Tuesday high of 2,864.7 is basically the red chip, so-called Chinese companies listed in Hong Kong Exchange. They have been underperforming. Companies like Alibaba has not been doing too well, and we can see that has been basically act as a wet blanket as far as the Hang Seng Index is concerned. So we have seen a lot of selling pressure over the week itself. So now we are almost towards the end of this week. Hopefully the market can stabilize at the yesterday low at 19,520 and rebound from here. But again, I do not want to put too much emphasis on this, because basically the Hang Seng market is basically right now looking to be a little bit unstable. Okay, over in the mainland index, when we look at the CSI 300, the high traded is 4,169.45. Has seen the market come down all the way below 4,000 points to a low of 3,925 last night, and we have a bit of a rebound. But again, the outlook for Chinese equity is less than ideal, because the reason why the market went up to 4,169 last Tuesday was on the back of better than expected GDP numbers and very strong retail sales. But since then, the market has been falling. Okay, so if we have fantastic economic numbers coming up from China, and yet equity prices start to backpedal, that is definitely not a good sign. So over the medium to long term, I think this decline from 4,267 at the beginning of February is likely to extend lower. My immediate target is for market to challenge the low here that we saw in December 20, just before Christmas, at 3,805. Okay, so there's a possibility market may even take out this level. Okay, so over in energy markets, we can see crude oil, WTI, which is the West Texas Intermediate crude oil, has actually broken below what I would consider to be a level in which it should be supported. That level is $75 and $68 per barrel. And remember, on April the 1st, OPEC Plus actually announced a production cut over the Sunday, and the market actually reacted the following day in Asia, creating this massive gap that you see on the chart here. So I was mentioning that perhaps for the market to fully cover this gap, it could actually go and test the $75.64. But yesterday it did more than that. It went up to a low of $74.02. So right now we see very little rebound here. So this market right now is building the case whereby there's going to be a lot more downside. However, before the market goes all the way down, maybe there could be a rebound. If a rebound actually happens, I think somewhere between $78.76 to $79.87 is going to be an area where I think selling interest may re-emerge. So if you are long, this could be your last place to get out of your long position and turn short. Okay, so of course we see the reason why crude oil prices has not been able to go much higher after the production cut has been announced is basically the global economy looks a little bit unsteady, and everybody's talking about a global recession, and this could actually be the reason why we cannot see very steady energy prices despite the production cut. Okay, now the only silver lining is in the natural gas. Now natural gas has actually been falling for quite some time, and the low traded this month was $1.94, and we have seen the market has rebounded off this low to a high of $2.41 as of Wednesday. But since the market has been coming down, basically I think the rebound from $1.94 is incomplete. There's a possibility the market may extend even higher to test the $2.58 to $2.68 level. So I think the outlook for natural gas is a lot brighter than the outlook for natural for crude oil. So this is somewhat of a divergence between the energy products here. Now, over in precious metal, you can see the gold prices continue to consolidate. Yesterday, we have a marginal high at $2,009.41, which is within this bracket of prices which I mentioned in previous updates. The $2,009 and $2,015 bracket of prices, I think, would attract selling interest. And true enough, yesterday's high was $2,009.41 was within this bracket of where I just mentioned, and prices has a reaction here in which it pulls back to below $1,980. Now we can see prices are again on the march, maybe even possibly re-entering this bracket of prices between $2,009 and $2,015. If we do have this move, this could be a last selling opportunity. Okay, prices may actually attempt to trade higher than $2,012.40, which was the high last traded on April the 20th. So if we did that scale, we get a very neat three-wave rally here, and it is actually corrective in nature, and I think it is likely to result in another dip in gold prices towards the $1,933 to as low as $1,915. Now, obviously, before the market even go as low as to test the 1900 levels, the market may actually stop at the point of origin. Now, remember, gold prices did not have that surge all the way to the year's high at $2,048.80. It all started about $1,950. So this could be, in my opinion, the point of origin of this surge in gold prices. And if the market do pull back, I think this will be an area of contention. So the first barrier, the first practical support will be 1,950. If that level fails to hold, then of course it will open up the possibility of a dip towards the 1,915 to the $1,933 level. Okay, over in silver market, this year we can see silver has been outperforming gold by a wide margin, and we can see that the pullback from $26.09 since April the 14th is still very corrective in nature. Now, if you look at it in this structure, it does not appear that the pullback from $26.09 is complete, and if that's the case, there's very high possibility we can see silver prices continue to slide towards perhaps $23.70 to $24.05. But you can see even then it is still screaming to be bought, and as I said, silver has been outperforming gold this year itself. So if you have a choice between buying gold or buying silver, my bet is on buying silver rather than buy gold. But gold is still in a multi-year up cycle here, so both will be equally good. But let's say if you have to choose between either go long on silver or go long on gold, then I would think my money is on buying silver rather than gold. Okay, but both are equally good. Okay, over in the dollar index, you can see dollar index has been a bit of an enigma. From 100.42 in the dollar index, it went up to a high of 101.94 before it slides back to yesterday low of 100.74. So this to-ing and flowing of the dollar index does suggest that the market is a little bit unsure where to take the dollar. But by and large, you can see technically, I think the dollar is still likely to go higher than lower. Okay, my opinion is that this market starting from 100.42 is likely to unfold in a three-wave rally targeting 102.26 to 102.62. So there is a possibility this level here 102.48 may be seen very shortly. There's even an outside possibility the market may go even as high as 103.03. Okay, so between 102.26 to 103.03, I think the market has an area in which you can actually aim for. My idea here is basically to buy the dollar index, which I have already done so. Okay, I'm probably going to add more position going into tonight's trading. Now remember, tonight we have the release of the Q1 2023 GDP report on top of the personal consumption expenditure numbers, which the Federal Reserve used as the important gauge to measure the rate of inflation in the in the States. Now, when we look at the dollar sliding back, obviously we're going to see corresponding, we're going to see higher prices in the other major currencies. In sterling, we saw that the sterling versus dollar went up to a high of 125.15 last night, and it has been stalling around this level. Now, this bracket of prices is a 124.90 to 125.20 level, was the level in which I did mention in previous update that this area may actually be an area in which selling interest may actually be seen. So based on risk reward ratio, okay, I am of the opinion maybe at this point in time, if you have to pick a currency to trade, I will be more in favor of selling the sterling versus the dollar, because if I'm wrong, I'm going to put my stop just above 125.50 levels, okay, and I'm going to exchange the possibility the market may even test 124.40 to as low as 121.80 level. So you can see the risk reward here is very superior. So I think sterling versus dollar is looking to be a fantastic setup to trade for the short term. Okay, over in euro dollar, unfortunately I was stopped out of my short dollar euro position. Market actually have a marginal high last night at 110.95 before it pulls back. Okay, so this is a little bit tricky. By and large, you can see that there's still some upside momentum left in the euro versus the dollar. So if we have another kick up in the dollar, in the euro versus the dollar, I think the area for me to reposition my short will be at 111.27 to 112.25. So this will be my area interest. I'm still looking to sell because my target is still at 105. Okay, so we can see from here to here there's about 600 points potential if I'm right. Okay, over in the Aussie, I am a little bit not too willing to take up a position because it's already very close to my original target of 0.6565, and the low traded last time was 0.6591. So you can see there's really little meat left. If you have not already sold, this is not a currency pair you want to be involved in. Can you buy it instead? I won't be touching this market for a while until something else tells me the market has changed characters. The one I'm still very in favor of is selling dollar versus the yen, which I've already been holding on this position for more than 2 weeks now. The high traded is 135.14, and that was traded on April the 19th, and the market has since gone down lower. Last time we have a low of 133.02. Okay, so we can see that market, despite falling about 400 points, does not look like it's going to it has bottom yet. So I am still looking at a situation in which I think dollar yen is going to slide further to maybe to test the March 24th low at 129.65. Okay, dollar CAC looks very bullish to me. You can see the dollar CAC has been rising since 133 to a high of 136.50 overnight, and it does looks like it is holding. It is still having that momentum. So very likely, I think we're going to see higher rates in the dollar versus Canadian. That in the event if we should get a retracement, I think the most we can expect is somewhere between 134.35 to 134.76. What would cause a possible retracement? I would have no idea. But if it does retrace, I think that would be a good catchment area to position long. Okay, but the odds of it happening tonight or even tomorrow is not very high. Okay, now when we consider or else, the biggest market that had very high volatility last night was in cryptocurrencies. You can see that the Bitcoin itself stabilized at 26,000, just under 27,000, and then last night we have a mysterious surge all the way to $30,000 and $22. Okay, but just as fast as it has risen, it also has come back down to earth very sharply, and it all happens within the day itself. Actually, within the last night, a high of $30,000 and $22. Market obviously came under selling pressure, saw the price crashing down to earth to $27,242 before we see another surge. Now we can see that this market has become very volatile. Now, one thing good about this activity last night was that it has basically eliminated a possibility of a 5-wave decline from 31,435. So what it means is that if it's not a 5-wave decline, then it's something else altogether. So based on the surge to 30,000 last night, and based on the another surge that we saw from 27,244 right after the market basically unraveled, this market is building up to be going higher. In my opinion, a test of 31,000 is going to be a foregone conclusion. My target right now is about 33,000 in the Bitcoin itself. So this is all I have for you for today. Now tomorrow I will give you another update. Hopefully I will be able to do it in the morning and not like today. In the meantime, you take care and be safe. Bye bye.